Hello. So today in this segment, we are going to talk about DCB Bank. This is a small cap bank, and we're going to talk about this bank's goals. What are this company's future goals and aspirations? What are its targets? What is it aiming at? So to give a brief summary, this is a bank, DCB Bank, market cap 3,900 crores, price of one share 124 rupees, price to earnings of 6, nice return on capital employed 7.6%, return on equity 11.4, not the highest really. Now if you want to look at its growth, the company has shown a compounded sales growth of 16% over the last 10 years and compounded profit growth of 12% over the last 10 years. Last 3 years the company has seen phenomenal growth in sales of 23% and 29% in profits. So today we're going to talk about the company's goals. What are DCB Bank's goals? So first. Now this thing, this blue para, this one light blue para, slightly blue para is from their annual report. So it's a screenshot from the annual report. Here it says, our intention remains to double the balance sheet in 3 to 4 years while continuing to improve productivity and profitability. Okay, what is the balance sheet? Balance sheet here comprises of advances and deposits, and of course includes some of the loans the banks will take from other financial institutions. But mainly, we're talking about advances and deposits. So they want to double the balance sheet in 3 to 4 years. This translates to a 18 to 25% compounded annual growth rate for advances and deposits. So they want to grow the advances, that are loans and deposits, taken from well customers, at 18 to 20% per year. That is one of their goals. So fast growth seems to be one of their goals. Then second goal. This is from their annual report, fiscal year 2025. Okay, and we can read all of this. So as we move into, let me make myself smaller. Let's read this. As we move into financial year 2025-2026, we are optimistic about the opportunities ahead and expect our deposits and advances growth to outpace the overall Indian banking industry level growth. Our focus would be on providing a single window financial solutions to address the surplus needs, the deficit needs, the risk containment needs, and the trade finance needs of the self employed segment, which forms the core of our franchise. Sorry. Spoilers. Not spoilers exactly. Hold up. Yes. This provides us with the consistent, sustainable, and predictable growth with return on equity ranging between 13 to 15% in near to midterm, reflecting our focus on profitability and capital efficiency. So big paragraph, but a lot of important things in this paragraph. So first they mentioned that their deposits and advances growth in the deposits and advances, they expect it to outpace the overall Indian banking industry's growth. Then they want to become a single window financial solutions. It's written here. See, a one-stop finance solutions for the customers, meaning any problems they need with their finance. Maybe they need a short-term loan. Maybe they need credit cards or any other financial needs they have. They can go to DCB Bank. Okay. So currently, who are their, you can say, the core franchise, the core customers, the self-employed segment directly below me, the self-employed segment. So people who own they're self-employed, have their own businesses, they may take normal loan from DCB Bank, but they will have other needs like working capital funds, like money for inventory, all of that. So to finance all these other needs, DCB Bank wants to become a one-stop finance solution for them. And they said that in the midterm, near to midterm, they want the return on equity to be around 13 to 15%. And right now it's around 11 to 12%. So there's this. Then one-stop finance solution for the customers. To elaborate on this even further, all right, we go to their con call. Now, this is from their con call. This is said directly by the CEO of the company. All right, so let's read. The number one challenge is to change the mindset. We have been playing this game like NBFCs. It is high time we stop doing that. We have been doing home loans, LAP, loan against property. We have been doing current account, savings account, term deposits. Somewhere not remembering that these are self employed customers who have surplus needs, deficit needs, risk protection needs, and trade finance needs. All right, so they think they have been playing this game like any other NBFC. They have forgotten that they're self employed customers, which is their core franchise. The majority of the loans, it's going to these customers, self employed customers. They have surplus needs, deficit needs, risk protection needs, trade finance needs in their own businesses. While managing their businesses, the business will have some special finance needs. Okay, so let's continue. We have kind of labeled them as home loan customers, loan against property customers. We have been running like a fill it, shut it, forget it business, and it's high time we change that. These are customers who have given their life's biggest aspirational assets, which is their self occupied home, as a collateral to the bank. But when he shuts down his shutters in the night and goes from his Purana store, the surplus balance is not kept with us. Okay. So they have treated the customers as any other normal customers, and it's mentioned here that they have given their self occupied home as a collateral. So, majority of the bank's loans are actually secured by collateral, meaning they're secured by a home. There's a home acts as a collateral security against the loan. So these are secured loans. Many of its loans are secured against some kinds of assets. In case of default, they can seize the home and try to minimize the losses. So there's that also. And then it's said he goes from his Kirana store, the surplus balance is not kept with us. The surplus balance, the store itself may have some cash, and instead of the cash just lying there, what the customer can do is that the customer can deposit this cash in DCB Bank. It can earn an interest, and DCB Bank can, earn fees. It can provide them overdraft accounts. It can provide them with cash advance accounts, current accounts, these types of bank accounts, which leads to higher and higher fees. Yes, overdraft account. Now, continuing to read, he may need some money at some point in time because of inventory reasons or because there is somebody chasing him. He takes a hand loan or takes it from an NBFC. Why would not he come to us? India is a very episodic country. Some earthquakes happen, some fire happens, something happens, accident happens. Risk protection not done through us. So they can provide even risk protection. How you may say? They can DCB Bank, what can do is that can provide insurance services to their customers, but not their own insurance services, third party insurance. So some other company, they will sell some other company's insurance services, third party services to the customers, which means they will earn a lot of fees from these third party companies because they will pay DCB Bank to, of course, resell their products or offer their products to the customers, leading to even more fees. Okay, fees is one of the main focuses of the bank, earning way more fees, non-interest income. All right. So risk protection, insurance is one of the things. And again, yes, trade transaction is not done through us. So trade financing, all that is not done to them. Like trade financing, for example, an overdraft account, uh, uh, yeah, an overdraft account, current accounts. So it's those types of accounts. DCB Bank can actually offer these accounts to their customers. Then, I think it is high time we change the way we did business in our bank to becoming a full financial solution provider for the self employed customer, which will cover his surplus needs. Yes, you can read it as current account savings account. His deficit needs, you can read it as overdraft facility. His protection needs, you can call it TPD. His trade finance needs, exactly trade finance. Okay. TPD. Let me search what is TPD. Hold up. TPD, meaning in banking. Yes, total permanent, hold up, total permanent disability, a type of insurance rider that provides financial support to policyholder if a policyholder becomes permanently unable to work. Insurance, okay. Insurance, third party insurance. Fine, yes, it was in fact insurance. So they have mentioned overdraft facility, they have mentioned trade financing, they mentioned TPD, insurance services for the risk needs, and current account savings accounts. All of these will translate to higher fees. So these are some of the goals of DCB Bank. One is massive growth. Other than that, we have higher return on equity, around 13 to 15%. They want their midterm return on equity. They want their deposits and advances to outpace the industry's growth, and they want to become a one-stop finance solution for the customers, providing them overdraft facilities, covering their surplus deficit needs, as the customers are mainly self-employed. So that was it. That were some of DCB Bank's goals. Hope you like the video.